Hello viewers, welcome to my channel. I am Hashim Ali Khan. Presently I am giving the lectures on the subject income tax 2. In this subject, the topic we are covering right now is income from other sources. Already some 5 problems we have already solved on income from other sources. Apart from that, one theory video I have prepared for giving all the provisions regarding how to compute income from other sources. So my regular viewers hope they have already watched that theory video of income from other sources, because without understanding the provisions you cannot go to the problems. Without understanding the provisions it will be very difficult for you to understand the problems. So my suggestion, before starting the problem, watch the complete provisions of Income Tax Act regarding how to compute income from interest on securities and other incomes, which comes under the head income from other sources. So those who are first time watching my channel, I suggest you to visit the playlist of my channel. I have uploaded a number of subjects on different topics. I have uploaded videos. Watch the video, increase your knowledge. Now I am reading out the 6th problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout, keep it ready before starting the problem. Now 6th problem I am reading out, see carefully. Mr. Hari submitted the following information: compute income from other sources. SSC Mr. Hari, and we have to compute income from other sources. One by one we'll discuss the provision. First, received from winning from lottery 1 lakh. Winning from lottery is a casual income. It is taxable under that income from other sources. But we need the gross amount. Now, actually what will happen when a person earns, that means wins a lottery prize, he will not get the entire amount of lottery prize. TDS will be made, tax deducted at source. So TDS at present for this assessment year is 30%. So if a person wins 1 lakh rupees, so from 1 lakh rupees, 30,000 will be deducted by the issuing authority, and only 70,000 rupees will be paid to the winner. That is the rule. So here, received winning from lottery means it's the net amount. This 1 lakh rupees is the net amount after deducting TDS. But as per the provisions, we need the gross amount. So this 1 lakh rupees should be grossed up. How to gross up? Net amount 1 lakh into 100 by 70. 100 by 70. In this way we can be able to convert the net amount into gross amount. Second, received from agricultural land in Japan 3 lakh. Regarding agricultural land, agricultural income is exempted if it is earned in India. Indian agricultural income is exempted, whereas agricultural income earned abroad outside India is taxable under the head income from other sources. Rent from sublet of house 72,000. Rent from subletting of the house is also an income from other source, and expenses incurred will be allowed as deduction. Here rent from subletting 72,000, rent paid 32,000, repair 2,000. Both these amount will be deducted from 72,000. Then rent from hiring the machinery. Rent from hiring the machinery is also an income from other source. So it will be taken into it. The expenditure incurred, repairs to machinery and depreciation will be allowed as deduction, will be deducted. Then family pension. Family pension is the pension received by the deceased employee. When the employee expires, dies, then the pension will be paid to the legal heirs. So this pension received by legal heirs of the deceased employee is called family pension. Family pension is taxable under income from other sources, but one deduction will be given. Under section 57(2)(a), the deduction is list of the following to 1/3 of pension received or rupees 15,000 fixed. After deducting this deduction, then we'll get the income. Take the total, that will be income from other sources. Now see carefully the solution. Computation of income from other source of Mr. Hari for the assessment year 1920. Winning from lottery, gross amount. We need the gross amount. This is received amount into 100 by 70, because 30% is the rate of tax. So we multiply 100 by 70. So 1 lakh rupees received amount into 100 by 70, 1,42,857. 1,42,857 is the gross winning from lottery. Gross amount of winning from lottery. Then income from agricultural land in Japan. So any agricultural income earned abroad outside India is taxable. Rent from subletting the house, 72,000. From this, the expenditure incurred on this sublet house, rent paid 32,000, repairs 2,000, that will be deducted. The net amount taxable is 38,000. So 72,000 minus 32,000 minus 2,000, 38,000. Rent from hiring the machinery, 24,000. Rent from hiring the plant, machinery, furniture, that will be treated as income from other source. So rent from hiring the machinery, 24,000 less repairs to machinery, depreciation. Both these will be deducted. 24,000 minus 8,000 minus 6,000, 10,000 net amount. Then family pension received. It is given in the problem 10,000 per month. So 10,000 into 12, 1,20,000 is the annual family pension. From this, deduction under section 57(2)(a), list of the following two amounts. 1/3 of pension received. So 1/3 of 1,20,000 is 40,000, or fixed amount is 15,000. Whichever is lower will be allowed as deduction. So out of these two, the lower is 15,000. So deduct 15,000. 1,20,000 minus 15,000, 1,05,000 is the taxable amount. Now take the total of all, you will get 5,95,857. This is income from other sources. That's all. So a number of new points you came across in this problem. Now I'll move on to the next problem, problem number 7. Calculate income from other sources from the following particulars. Interest on tax-free government securities, 17,500 net amount. So interest from securities, income from interest on securities we have to take. That is a part of income from other sources. So interest on tax-free government securities, net amount is given. When net amount is given, we have to gross it up. How to gross it up? Net interest into 100 by 90. 100 by 90. So we will get interest on tax-free government security. Similarly, interest on tax-free listed company debentures, 24,000 net amount. Again, it is given net. When net amount is given, we have to gross it up. How to gross? Net interest into 100 by 90. So both the interest will be multiplied by 100 by 90 to make it gross. Dividend from foreign companies, gross. See here, dividend received from Indian companies are exempted, whereas dividend received from foreign companies is taxable under income from other sources. Dividend from Indian companies, 25,000 net, not taxable. Dividend received on preference share and equity share of Indian companies is not taxable. If the aggregate of total dividend exceeds 10 lakh rupees, then it is taxable at 10% flat. Royalty on production of books, it is taxable as income from other sources. Rent from letting plant, machinery, furniture, building, 75,000. Letting out of plant, machinery, furniture, building, 75,000. This is income from other source. Now all expenditure will be deducted. Repairs 5,000 deducted. Insurance 3,600. Collection charges 1,000. All the three are expenditure incurred, that will be deducted. Lottery winning 50,000 net. Lottery winning is there. Winning from lottery, again it is income from other source, but we want the gross amount. We don't want net amount. So how to convert the net amount into gross one? Net amount into 100 by 70. Because on winning from lottery, 30% is the rate of tax. So we multiply 100 by 70. Agents commission from Life Insurance Corporation of India. Agents commission. So commission received as from LIC. That is also taxable under income from other source. Collection charges towards interest and dividend, 1,200. So collection charges for interest will be allowed as deduction under section 57. That's it. So now the solution will be like this. Computation of income from other sources. Interest on tax-free government security. First item given in the problem. Net amount is given 17,500. But we don't require net amount, we want the gross amount. So gross interest is equal to net interest into 100 by 90. So 17,500 into 100 by 90, 19,444. This is the gross interest. Second, Interest on tax-free listed company debentures. Again, net amount is given. Net interest 24,000 is given. We want gross. The gross interest is equal to 24,000 into 100 by 90. It comes to 26,667. Now third one. Now first of all, only two securities are given. We are given interest on security only two. So we add up total gross interest will be 46,111. This is the total gross interest. From this we deduction under section 57, collection charges. So collection charges are 1200 rupees deducted. We'll get income from interest on security 44,911. 44,911 is the income from interest on securities. And apart from that, dividend from foreign company, it is taxable. Royalty on production of books, it is taxable. Rent from letting of plant, machinery, furniture, building, 75,000. From this 75,000, deduct all expenditure incurred to earn this income. Repairs, insurance, collection charges. All the three are allowed as deduction. So subtract minus 5,000, minus 3,600, minus 1,000. The net amount is 65,400. Next one is lottery winning gross amount. In the problem, net amount is given 50,000. We have to gross it up. So 50,000 into 100 by 70. You will get 71,429. Then last one, agent's commission. It is given 20,500. Now you take the total income from other sources, 2,83,240. 2,83,240 is the income from other sources. Now you see the eighth problem. Sri Raghu furnished the following particulars of his income for the previous year ended 31st March 2019. So determine the income chargeable under that income from other source for the current assessment year 2019-20. Our current assessment year is 2019-20. The previous year is 18-19. Ends on 31st March 2019. So what are the investments incomes? Rent from subletting of plant and machinery. Rent from subletting of plant, machinery, etc. That is taxable under income from other sources. If any expenditure is incurred in earning this income, that will be allowed as deduction. Dividend from shares of Akai and Company Japan, net. The dividend received from a foreign company is fully taxable. It is given Akai Company, Japan. Then dividend received from shares of foreign country. That is also foreign country means outside India. Any dividend received from foreign company is fully taxable. Then winning from lottery net 70,000, TDS 30,000. So after deducting the TDS, net winning from lottery is 70,000. So we add back the TDS. So 70,000 plus 30,000. 1 lakh rupees is the gross winning from lottery. Rent from letting of open land. When open land is let out, the rent received from open land is taxable under income from other source. Then repairs to plant let out rupees 500, insurance for machinery 850. First item, rent from subletting of plant and machinery. So that rent received, the SSC is incurring some expenditure on letting out of plant and machinery. What are the expenditure? Expenditure on, it is given repairs to plant 500 and insurance 850. So both these amount will be deducted from rent from subletting of plant and machinery. Then rupees 1,50,000, 18% less tax debentures of Tata Company Limited. This will come under income from interest on securities. Then 40,000 interest on tax-free debentures of mining company unlisted. That will also come under income from interest on securities. Interest collection charges are 1,500. This will be allowed as deduction. Then lottery ticket purchased worth rupees 2,000. Not allowed. Specifically provision is given in the Income Tax Act that winning from lottery is fully taxable and tickets purchased for the lottery will not be allowed as deduction. So simply you have to give a note. Purchasing of lottery tickets will not be allowed as deduction. That's it. Now the solution of the 8th problem. Computation of income from other source of Sri Raghu for the assessment year 1920. Rent from subletting of plant and machinery 40,800 given in the first line. From this we deduct the expenditure incurred on this income On this income means let out, income from let out of plant and machinery. So what is the expenditure? Repairs 500, insurance 850. Both these amount you deduct. The net income is 39,450. Second one, dividend from shares of Akai Company Japan, then dividend from shares of foreign company. Both are fully taxable. Winning from lottery, gross amount. Net amount is given 70,000 and TDS is given 30,000. Add up both 1 lakh. Rent from open land 25,000 directly will take. Now interest on security. It is given 1,50,000, 18% less tax debenture of Tata Company Limited. When it is less tax, simply one step we have to calculate the interest, gross interest. The gross interest is equal to face value into rate by 100. What is the face value? 1,50,000. Rate is 18%. So 1,50,000 into 18 by 100, you will get 27,000. 27,000 is the gross interest. Second, rupees 40,000 interest on tax-free debentures of mining company. Tax-free debentures of mining company. So gross, we have to gross up. Net interest is given. 40,000 rupees is the interest received. Now we have to gross it up. So net interest into 100 by 90. Gross interest is equal to net interest into 100 by 90. So 40,000 into 100 by 90, 44,440. 44,440. Add up both, you will get 71,444 is the gross interest. From gross interest, we deduct collection charges. The collection charges, interest collection charges are 1,500. Deduct 69,944. This is the income from interest on securities. Now you add up all the amounts. The total is 2,57,824. This is the total income from other sources. So we have completed 8 problems on computing the income from other sources. Now we'll start the next problem. Problem number 9. Srimati Rani's investments are as under. Find out the taxable income from interest on security for the current assessment year. So investments are given. One by one, I'll read out and discuss what are the provisions. Rupees 40,000, 15% Haryana government loan. Nothing is given, so it is a less tax. If tax free is not given, we assume it as less tax. For less tax, only one step. Gross interest is equal to face value into rate by 100. Face value 40,000 into 15 by 100, that's all. Second, rupees 20,000, 12.5% municipal bonds. Again, nothing is given, less tax. Face value into rate by 100. 20,000 into 12.5 by 100. Rupees 30,000, 8% NRI bonds of SBI. Rupees 30,000, 8% NRI bonds of SBI. It is fully exempted from tax security. The bonds of NRI bonds issued by SBI are fully exempted from tax. So simply we have to give a note that the interest from NRI bonds is fully exempted. Next, rupees 80,000, 16% second debentures of a limited company. First debenture or second debenture does not matter. It's a debenture of a limited company. Nothing is given, so less tax. It is a less tax. Face value into rate by 100. 80,000 into 16 by 100. Then 40,000. Rupees 40,000, 16% cumulative preference shares of limited company. The investment in cumulative preference shares will give a return in the form of dividend. The dividend received on preference shares and equity shares from domestic company, Indian company, fully exempted from tax. So for this last point, cumulative preference shares will give a note that dividend on preference shares are exempted from tax. The collection charges amounted to rupees 225, deduction under section 57. She paid 1,250 as interest on loan taken for the purpose of purchasing municipal bonds. So 2 deductions are allowed under section 57. 1, collection charges. 2, interest on loan taken to purchase the security. That will be allowed. So the solution of this problem will be computation of income from interest on security of Srimati Rani. 40,000, 15% Haryana government loan. Nothing is given, so we treat it as less tax. For less tax, only one step, gross face value into rate by 100. 40,000 into 15 by 100, 6,000. 20,000, 12.5% municipal bonds. Again, it is less tax. Only one step, face value into rate by 100. 30,000, 8% NRI bonds of SBI, fully exempted from tax. Just now I told you. 80,000, 16% second debentures of a limited company. Again, nothing is given, less tax. Face value into rate by 100, 80,000, 16 by 100, 12,800. We have taken all the items, take the total gross interest. From gross interest, two deductions are allowed under section 57. Collection charges 225 given. Interest paid on loan taken to purchase municipal bonds 1250 allowed as deduction. Take the total 1,475. Deduct income from interest on security 19,825. That's all. In working note, we will write down dividend on preference shares are fully exempted from tax. That's all. So this is the complete solution of problem number 9. Now I am reading out problem number 10. The following are the incomes received by Mr. Kalyan Gupta during the previous year. In this problem, directly incomes received, interest amounts are given. Previous problem mein interest amount were not given, percentages were given. So we have calculated the interest, face value into rate by 100, we will get the interest, right? But this is the first problem where interest amounts are given, directly interest amounts are given. So we have to see whether it is a net interest or gross interest. If it is a gross interest, directly we take it in the outer column. If it is a net interest, we gross it up. We gross it up by multiplying 100 by 90. Net interest into 100 by 90 will get the gross interest, right? That's what. The first item, rupees 30,000 interest on Nagpur Municipal Corporation bonds. Already we have discussed this point in theory video. List of securities on which there is no tax, exempted from tax. So one of the security is Nagpur Municipal Corporation bond. Nagpur Municipal Corporation bond is a exempted from tax security. So interest earned from Nagpur Municipal Corporation bond are fully exempted. So here I have written computation of income from interest on security of Mr. Kalyan Gupta. 30,000 interest on Nagpur Municipal Corporation bond fully exempted from tax. This point you have to remember. No tax at all on interest received on Nagpur Municipal Corporation bond. Second, rupees 11,500 interest on 12-year National Saving Plan certificate. Interest received on National Saving Plan certificate fully exempted from tax. 11,500 interest on 12-year National Plan Saving Certificate fully exempted from tax. The first two securities, no tax. Third one, rupees 21,000 interest on tax-free Indian government security. So whatever is the interest received, that itself is the gross interest because it is a tax-free government security. When tax-free government security is there, whatever interest amount is given, that interest is the gross interest. So here 21,000 interest on tax-free government securities, Indian government securities, 21,000 same amount. The received amount is the gross amount. Next, 33,600 tax-free debentures listed in Calcutta Stock Exchange of PQR Limited. Simply, tax-free debentures of PQR Limited. PQR Limited means commercial. It is tax-free commercial security. So the interest given is the net interest. What is the interest given? 33,600 is the interest given. Net interest, we have to gross up. So 33,600 into 100 by 90. Here you can see. 33,600 tax-free debenture of PQR Limited. The gross interest 33,600 into 100 by 90. So 37,333. So the interest given, the interest received on tax-free commercial security is the net interest. Interest received on tax-free commercial security is the net interest. We have to gross down. Whereas tax-free government security, the interest itself is the gross interest. No need to gross. So here you can see the difference between third point and fourth point. In third point, tax-free government securities, same amount. Here fourth point, tax-free debentures of PQR Limited. It's a commercial security. So we have to gross down. Then next one, rupees 40,800 interest on MP government loan. MP government loan. So nothing is given. So it is a less tax. So 40,800 interest on MP government loan. So directly we'll take 40,800 because it's a government security. Next, rupees 40,000 interest on tax-free debenture of a mining company limited. Unlisted. Listed or unlisted doesn't matter, but it is a tax-free commercial security. When it's a tax-free commercial security, the amount given is the net amount. We have to gross down. We have to gross down. Multiply by 100 by 90. So 40,000 interest on tax-free debenture of mining company. Gross interest 40,000 into 100 by 90. 44,444. This is the gross amount. Next, 43,200 interest on debentures of a sugar company. 43,200 is the interest on debenture of a sugar company. So this is the net interest. 42,200 interest on debenture of a sugar company. This is the net interest. Now we have to gross down. Multiply 100 by 90, 48,000. That's it. Last one is 15,000 dividend on preference shares. Dividend on preference share will not come under interest on security. Actually, dividend on preference share is fully exempted from tax. So we have to give a note. The bank realized the interest on all these securities for which they charged 2.5% on amount collected. The collection charges charged by the banker is 2.5% on amount collected. And compute the taxable income from interest on security and tax liability if the income from other heads are 6,31,000. If the interest is due on 30th April and 31st October. So first of all, gross interest we have calculated. Less deductions under section 57, collection charges, working note. In working note I have calculated 4,465 is the collection charges. How we got this 4,465? I'll show it in the working note. Then after deducting 4,465, 1,87,112. This is the income from interest on security. Income from interest on securities. 1,87,112. Now it is asking you to calculate the tax liability also. Before that, how we got collection charges? Collection charges are 2.5% on amount collected. So amount collected kitna hua? Only net amount we should take, not the gross amount. Don't think that gross interest is the amount collected. Gross interest is not the amount collected. So we have to take only the net interest. And while calculating collection charges, no collection charges will be allowed on amount received on interest on Nagpur and 12% national saving. If the security is fully exempted from tax, then collection charges will not be allowed as deduction on this fully exempted. Now we'll take this 21,000 interest on tax-free Indian government security, 21,000. Amount collected and taken 21,000. Then second, 33,600 tax-free debentures of PQR Limited. Gross amount is 37,333. Net amount is 33,600. We should take the net amount, not the gross amount. 33,600 will take. Here we have taken. Then 40,800 interest on MP government loan. Net interest, gross interest, both are same. So 40,800. Here 40,000 net interest, gross interest is 44,444. But we need the net interest, 40,000. 40,000. Lastly, 43,200 is the net interest, 48,000 is the gross interest. We need the net interest, 43,200. So 43,200. Add up all 1,78,600 is the amount collected by the bank. Amount collected by the bank. So 2.5% on this amount collected, 4,465. So I have taken 4,465. Right? Now computation of tax liability. Income from other sources, 1,87,112. This is the income from other sources, 1,87,112. Income under other heads, given in the problem 6,31,000. Other heads. So total income is 8,18,112. This is the total income, 8,18,112. Rounded off to the next 10. So it will be 8,18,110. 112 is there. So 2 rupees we ignore, rounded off. 110. The total income, taxable income is 8,18,110. Now we have to calculate the tax liability. Slab income rate tax. First slab 2,50,000. So up to 2,50,000, income is 2,50,000, rate nil, tax nil. No tax. Up to 2,50,000. Next 2,50,000 1 to 5 lakh. 2,50,000 1 rupee to 5 lakh. So 2,50,000 is the income on which 5%. So 2,50,000 into 5%, 12,500 is the tax. Now next slab is 5 lakh 1 rupee to 10 lakh. 5 lakh 1 rupee to 10 lakh. But our income is not going up to 10 lakh. Our income is only 8 lakh 18,000. It is not going up to 10 lakh. That's why we'll take the balance. I'm taking the balance. So total 8 lakh 18,110 minus 5 lakh, 2 lakh 50, 2 lakh 50, 5 lakh. So 8 18 110 minus 5 lakh, 3 18 110. On this 3 18 110, 20%, it comes to 63,622. Now add up 76,122 is the tax on total income. So tax on total income 76,112 plus health insurance, health and education cess. Health and education cess 4%. So 4% of 76,122, 3045. Add up tax liability 79,167. Round it off to the next 10 rupees. So 79,170. 67 can be made as 70. So 79,170. This is the tax liability. This is the complete solution of problem number 10. So far I have completed 10 problems on computation of income from other sources. So hope you got a good comment on the provisions of computing the income from other sources. So if you are satisfied, give a like to the video. Share it in your group, in your friend circle, so that more students can watch these videos. And give your comments on these lectures. And subscribe my channel if you have not yet subscribed. We'll continue the next problem in the next video.